Hello everyone. Today we are going to talk about an important topic in accounting, that is how to classify the accounts while recording the transactions under traditional approach. Before that, we have to know two key terms in the accounting, which are debit and credit. Each and every transaction has two sides, that is, if one account is debited, the account is credited. Just imagine of a seesaw. If one side goes up, the other side must go down. In the same way, each and every transaction in the accounting has one debit and one credit. So, for the recording of each transaction into journals, the accounts are classified into three. Number one is personal account, number two is real account, and number three is normal account. First, let's discuss about personal account. Personal account involves the persons or the business organizations, which means it deals with the persons or the organizations. Let's imagine we are running a business and we have bought some goods from Mahesh & Co. for credit. We did not pay them cash, so we owe them money, so we have to pay to the creditor. He becomes a creditor in our books of accounts. The rule for the personal account is debit the receiver and credit the giver. So the rule is debit the receiver and credit the giver. So in the previous example, we took Mahesh & Co. is a creditor. He is giving goods to us. So we will be crediting Mahesh & Co. account in our books since he is a giver. He becomes a creditor in our books of accounts. Let's discuss further. Personal accounts are again divided into three categories, which are natural persons, artificial persons, and representative persons. Natural persons are nothing but human beings like you and me. The real persons, for example, Ramesh, Suresh, Mahesh, etc. Second is artificial persons, or also called as legal person accounts. For example, companies, banks, trusts, societies, etc. If you take Tata Group, which is a company, HDFC Bank, which is a bank, and other business organizations, which acts as a separate legal entity. Separate legal entity. Okay, and the third category is representative persons. These does not belong to a specific person, but they represent a group of people. For example, since we are running a business, we will have employees in our entity, right? We have to pay salaries to them every month. If we are paying salaries, it will become an expense. We have to pay it. If we are paying, we'll pay in cash. But if we are not paying, we have to pay, which becomes due from our side to the employees, which is outstanding. So outstanding salaries to employees will become a representative personal account. So to summarize the personal account, the rule is debit the receiver and credit the giver. And they are again categorized into three: natural, artificial, and representative. Natural personal account are nothing but real human beings, real persons. Artificial persons or legal accounts are nothing but the companies, banks, clubs, trusts, and societies, etc., which is a separate legal entity. And representative persons are nothing but prepaid expenses or outstanding expenses. And second account in the classification of accounts is a real account. These accounts are related to the things that the business owns, like land and building, plant and machinery, etc. All kinds of tangible and intangible assets. The rule for the real account is debit what comes in, credit what goes out. The rule for real account is debit what comes in, credit what goes out. For example, we have bought a new office table to our business. Okay, here office table is coming in to the business. When we are bringing office table, we are paying in cash. So cash is going out of business. So what is coming in, office table is coming in and cash is going out. So the entry for this transaction would be office table account debit to cash account, crediting the cashier. So the other examples might be like plant and machinery, cash in hand, cash at bank, and intangible assets like patent, trademarks, etc. and investments made by the company will also come under real account. To summarize, the real account, these are nothing but the things which are owned by the company, like plant and machinery, patent, cash, cash in bank, cash in hand, etc. The rule is debit what comes in, credit what goes out. And the third account is nominal account. This account deals with the expenses, losses, incomes and gains of the the entity. The rule is debit all expenses and losses, credit all incomes and gains. For example, we are paying salary to the employees in cash. Salary is an expense to the company. When we pay salary, cash will go out of the business. So the entry would be salary account debit to cash, because the salary is an expense, so we are debiting the salary, and cash is going out, so we are crediting the cash. Other examples of nominal account can be commission received, interest paid, or rent paid, or any other expenses and incomes of the entity. Always remember that the end result of the nominal account will either be loss or gain, which is ultimately transferred to the capital account. Since these are related to only a specific accounting period, these accounts will always be temporary, because the end result will be transferred to capital account. So to summarize, nominal account, these are related to expenses, incomes, gains and losses of the company. The rule is debit all expenses and losses, credit all incomes and gains. These are related to specific accounting period, so they are temporary. Let's revise all the three accounts once. Number 1 is personal account. The rule is debit the receiver, credit the giver. These are related to the persons or the organizations. These are again categorized into 3. One is natural person, which are human beings, real persons. Second is artificial persons, which is a separate legal entity. And the third is representative person, which represents group of persons. And the second one is real account. The rule is debit what comes in, credit what goes out. Examples are tangible and intangible assets of the company, like plant and machinery, land and building, patents, trademarks, etc. The third one is nominal account, which tracks the expenses and losses, incomes and gains of the company. Example, rent paid, salary paid, commission received, interest paid, etc. So these are always temporary. Remember, the end result will be transferred to capital account, so these are temporary. In simple terms, every transaction belongs to one of these 3 accounts. So understanding these will help us in recording the journal entries and helps us in identifying and recording the transactions. Keep learning and practicing. See you in the next video.